Hi everyone, today let's talk about the indicator that's giving us a warning over the next 10 years. Then we'll take a look at sentiment, the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So starting off with this interesting indicator they're talking about that is currently giving us a warning. It's primarily focused on how much investors allocate to stocks. And anytime investors are above the 40% line, that is an indicator that we need to be cautious. And they mention it here, every time investors allocate more than 40% to stocks, they're expected to experience losses over the following decade. And you can see here in 2021, we were at that 50% mark, and you can see the expected return was minus 5% over the next decade. And you can see how that has been correlated here in the past. So investors were allocated around 25 to 30% stocks here in the lows of 2008, 2009, and you can see the actual return on that money was between 10 and 15%. So anytime we're in this range, it's usually in good shape. And then we had the dot-com bubble. Obviously, we were super high at that 50% mark, and then over the next decade, we did experience losses. So far, this indicator has been pretty accurate. You can see we are extended to the upside well above that 40% mark, which is the cutoff generally for positive returns over the next decade. They mentioned that this is sourced from the St. Louis Fed at this link. I'll go ahead and post that in the description so you can take a look at it for yourself. But the St. Louis Fed tracks this data in terms of what percentage of money is currently invested in stocks. And you can see that metric is above that 40% mark, generally indicating that we are looking at losses over the next 10 years, at least from current prices. I don't know if that factors in dividends or not. That would be interesting to see. It does not specify in this article. My guess is that it doesn't. So if you're a long-term dividend investor, you might be in better shape. But if you're looking at growth, it might be a little bit tougher over the next decade. And then for a specific number, they mention investors are currently sitting at 46%. And you can see they posted another graph here indicating the higher the percentage of allocation on this x-axis. And then the y-axis is subsequent returns. So as we get closer to that 20% allocation, your returns are closer to that 15% mark. But as you're at that 50% mark, you're generally expected to experience negative 5% over the next decade. In terms of short-term sentiment, Fear and Greed Index is reading extreme greed. We have seen extreme greed for a while now. The last couple trading days have been extreme greed. Last week we were just in greed, but now we've stepped up into extreme. And you can see that here in the other indicators, market momentum, strength, breadth, as well as put-call ratio, all in extreme greed. I generally ignore market volatility and safe haven demand, although it's interesting to see junk bond demand is back into greed. This was sitting in fear, but now we're back into greed here, so almost all of the metrics are in greed at this point, which is obviously not great. Of course, you have to look at the price action. Price action is king, but this is an interesting indicator and typically means we are in a region where markets are likely to top sometime in the next week or two, in my opinion. Moving over to the economic calendar for today, 5-year note auction came in at 3.8, pretty good, well below the 4.4 from the previous read. And then looking at tomorrow, I'll be watching continuing jobless claims as well as initial jobless claims. Those continue to be interesting. And then pending home sales, always interesting, expected to be 0.1, much higher than the previous read of minus 1.5. And then in the afternoon, you have the 7-year auction, which I do expect to be much lower than the previous read, which have been interesting here recently. Moving over to Max Payne, you can see it's sitting at 470. Current stock price basically unchanged here at 475. Total options way higher here at 2.4 million. Definitely interesting. Put call ratio did go a little bit higher here today. 475 and 480 continued to be very, very, very strong call walls. 116,000 and 126,000. These continue to grow every single day, it seems like. Top of the put still sitting at 478. I expect to close below 475 for the Friday session at this point. These call walls are just too strong relative to the number of puts that we see here. 470 is your first kind of small put wall at 35,000. Then you got 465 down here at 47,000. Those may or may not hold up, but I do expect 475 to hold. Moving over to the charts, starting off with the S&Ps, you can see we were sideways chopped throughout the day until that last candle of the day, which was up 0.21%, which ended up giving us a positive 0.81% on the day. Momentum on the daily chart still basically zero, but continuing to make new highs on this chart, continuing to close above 474. Price action continues to show quite bullish, which is interesting coming off of the max pain data that we saw. So price action actually a little bit higher than the max pain data, but 475, that first call wall, 480 being the next one, which is just behind my 479.30 level. I don't expect to break through there before the Friday session. That would be a pretty decent push. That'd be about another 1% by the end of the Friday session, but you can't ignore it. Price action continues to go lower, and we closed basically at the high of the day. And you can see the volume was ramping up into the close as we continue to hold this highly traded zone on the 1 hour chart. So overall, still bullish on the SPY. Moving over to the Qs on the hourly and the daily, you can see very similar price action, quite choppy. We did try to rally here in the pre-market, hit that trend line and then broke down, tested this lower trend line, ended up holding that area as well as that 410.46 level. All of those wicks on the hourly chart ended up holding, and then you can see that last candle of the day, big volume, big rally, closed much higher than where we were. I was kind of expecting to close right around that 410.90, 410.80 area. That's where we were hovering most of the day. And then on that last hour, we ended up pushing up quite strong. Actually, let's go ahead and look at the 15-minute chart. You can see it really was that last 15-minute candle, and you can see all of that volume in that candle as well. So we were really choppy. Anytime we showed strength, we ended up breaking back down to support. Support held. You can see a higher low setup here. And then we rallied right into the close, and here even a little bit more after hours. So very, very strong price action on the shorter time frames. Doesn't look super strong on the daily chart, but remember, these are all-time highs on the NASDAQ. We are in price discovery, no real levels to the upside, and we continue to get new high closes every single day over the last couple of days. Moving over to the Russell here on the hourly chart, you can see very similar price action to the SPY and the NASDAQ. Choppy throughout the session, tested the 21 EMA, continued to be strong at that level. Didn't really make new highs from the pre-market highs, which was still technically a little bit above the high from yesterday. And we did end up closing above my 204.62 level, so that's quite bullish. Next level for me is all the way up at 208. Let's go ahead and throw that up on the daily chart to find some levels here. So I have 208 as my next one. Yeah, there's really nothing in there. You can see those levels were defined back here in March of 20. We're currently at this 204, which was this pivot before that big drop. And then you have this kind of neckline before that big pop that we had. So 208 is an important level right before which was the starting point for that initial drop. So 208, definitely important. You can maybe argue something in here at 210. In between here, however, kind of tough. Maybe 206.50 would be interesting. Let's go ahead and put one at 206.50. I do think that might be an interesting level. That's about 1% higher from current prices, so I'll throw that in there. We'll see. I consider that to be a little bit weaker than the 208 level, but it gives you something to reference in the shorter term. You can see what that looks like on the daily chart. The rally continues, got a new high close, did doji, not super strong, 0.35%. Overbought conditions on the daily chart. Everything still looks strong, continuing to make new high closes. And then looking at the Dow on the hourly just for a moment, you can see we did close above the high here from Wednesday of last week, right around that 376.50 level. Go ahead and look at that on the daily here just for a moment. This is price discovery for the Dow. These are all-time highs, so we're continuing to go higher. We did get a new high close. Momentum, slightly bearish, no momentum. This is a melt up at this point. RSI, super overbought. We did see volume pick up a little bit, which is interesting from the Tuesday session. So continues to look pretty strong on the Dow, even if this is kind of the laggard of the group over the last couple of days. Moving over to Apple and Tesla. Apple finally caught a bid. We had 4 days in a row of negative price action. Did look like it was going to be negative on the day, but then we caught a bid. Let's go ahead and look at that one a little bit closer here. Jumping down to that 4-hour chart, we were watching that 144 EMA sitting at 190.80. We didn't quite get there. We did get a little bit of news on their iWatch. They were stopping sales on the iWatch, but news came out that that halt was stopped in the appeals court. So right now they can continue to sell watches. Maybe that gave Apple a little bit of strength in this area, or is just a little bit oversold in these shorter time frames. Looking at the hourly chart for a moment, you can see we did hit oversold conditions here early in the session, and then we bounced to finish basically unchanged there. So it looks okay on the daily chart with that first wick low. We'll see if we get a continuation higher. Momentum still bearish, RSI kind of neutral there. And then moving over to Tesla, big day for Tesla here today. Gapped up, rallied really strong. Didn't quite get to our price target at 264.68. I still expect to get to that level. You can see this previous consolidation over through that level to that downtrend line. I do expect to get to at least that horizontal resistance. Bullish momentum, bullish RSI. Tesla continues to look strong as we continue to break out of this trading range. Moving over to AMD and NVIDIA on the weekly charts. Massive week here for AMD so far at 4.63%. Looking at the daily chart there just for a moment, you can see the gap up and rally. Got through my 144.93 level. Next one, 151.18. This is not an all-time high. Going back to the weekly, you can see we did make our all-time highs going back here to November of 21, which did cap out all the way in the 165 area. So quite a bit of room to go there, but this does look very strong, very bullish momentum, super overbought conditions on the weekly chart, very strong rally from 94 almost to the 150s, and I do think that we will get there. And then interesting to see the difference here between NVIDIA, which has been consolidating for quite a few weeks at this point. Pretty wide range, down to 405 all the way up to 505, so about a 100-point range, very, very wide, which is not crazy for NVIDIA. This is a quite volatile stock, but you can see we've been in this range for a while. We're not making new highs or anything the way that AMD is, and this really has been the outperformer in the semiconductor space. And the semiconductor space as a whole has been an outperformer. Moving over to staples and discretionaries, staples continues to outperform versus discretionaries, 0.46% compared to 0.34. So people moving into safer stocks, we're seeing a rotation out of growth, out of risky stocks, which is interesting, especially considering that we're seeing Tesla continue to move higher over the last couple of days. Discretionaries not doing quite the same, still in this short-term trading range. Did show a slight bullish day, but we're still below that high around 181.73. Daily momentum fading, RSI below the SMA in overbought conditions versus staples, which did dip, did find support, and it is rallying once again, closed above 144, looking at that 72.50 level as your next resistance. Moving over to oil and gas and energy sectors, these did look kind of weak on the day, surprisingly. They had been rallying pretty aggressively over the last couple of days, got above 140.88 here on oil and gas, gapped up, gapped down, held right at VWAP. Momentum fading slightly, but still does look quite strong, still definitely in an uptrend, watching that 21 EMA here at 139.22. And I do think this is at least a base. You can see this previous consolidation. We're still above that. We're still above the highly traded zone. I would like to see it hold above 140.88. I'll be watching that one closely, but the 21 and 144 EMAs here at 139 are definitely interesting. And then looking at energy, I did pick up a position here in energy at the 185 puts for about 30 cents. So looking to purchase the stock down around 140.70 or so, which is just above my level that I'd be watching. Highly traded zone right in that same area for that put. Momentum slightly bearish. I don't like that. RSI still slightly bullish, but we are above the 21 EMA and the 200 SMA, which is what I want to see. And then my price target there at 87.37. You can see this previous move, dipped down, consolidated, dipped low, had a clear double bottom, rallied out of that. And as long as this structure holds in here, I do think energy is pretty decent over the next couple of months. Moving over to the 20 and 50-day averages, you can see we were down slightly on both of these charts here today, 1.89 on the 20-day average and 1.12 on the 50-day average. So continuing to trade in this zone here for the 20-day. 50-day continues to top out right in this range, right around that 90 area. That is just about the top of this range. Has not rolled over yet, so we're continuing to see markets go higher. We've said this many times, but we have about another week or two in this range before the 50-day tends to drop. Take a look at it one more time here on the weekly chart. You can see we get into the zone, get 1 or 2 weeks here before you see that bigger drop. We've spent 2 weeks already. We're on that 3rd week in this zone. Momentum fading, waiting to see that follow through to the downside. Hasn't happened yet. Markets continue to go higher, but just something to watch on the breadth. Moving over to yields, we saw yields sell off quite strongly once again, 2.8% to the downside on the 2-year yield, 2.87 to the downside on the 10-year. I do think this is pretty oversold at this point. So I think markets are being a little bit aggressive on how much the Fed is actually going to cut next year. Markets are pricing in about 1.25% to 1.5%, while the Fed is currently signaling only 0.75%. So I think we're being a little optimistic, and I think markets are rallying a little bit too aggressively on that information. Of course, price action is king, so you do have to continue to watch. Yields are going lower. took out my 2.25 level. Next level for me, right around that 4% area, just above it. At some point, this is going to stop. I think yields are going to turn around, but we don't have any indicators of that yet. Yields are continuing to go lower, and that's why I've been talking about those bond auctions, which continue to come in quite low. Moving over to put call ratio, I just wanted to highlight this really wide ranging day that we saw. So we gapped down massive, ended up rallying super aggressively back up into this one area, but we dipped all the way down to that half range, which is quite low. Usually when you get into a very low put call ratio like that, that tends to be the top of markets, but then we rallied right back into this mid-range around that one, and then we ended up higher on the day. So definitely interesting to watch on the put call ratio. Like I said, this is usually a turning point, top of markets type move, but we're not seeing a consistent move like we did here, where you move into this range, get kind of a market top, and then we see markets pull back, kind of bottom out, and then we move into this range. Not quite seeing that yet, but definitely interesting to see here on the put call ratio. Moving over to the dollar on the hourly and the daily, we got another massive sell-off here. So you can see we were waterfalling off that 21 EMA. On the hourly chart, big bearish momentum, big bearish RSI. You can see on the weekly chart, let's go ahead and look at that a little closer. I'm watching that 144 EMA currently at 175. Didn't quite get there today. I would expect to get there tomorrow. Let's go ahead and look at that on the daily chart. Not really a level there on the daily, but we're below all the EMAs and SMAs on the daily chart, which is quite bearish. So really just watching that weekly chart to see if we do touch that level tomorrow. Haven't quite gotten there yet. And if we do, that might be an area where we eventually find some support. Otherwise, momentum and RSI are still very weak on the dollar, which continue to give equity strength in my opinion. Moving over to bonds on the daily charts, you can see J&K gapped up, rallied, almost got to that next level at 95.61, stopped just short, closed at 90.40. Otherwise, still a very bullish move. New high close there here in the short term. Bullish momentum, bullish RSI. Bonds continue to look strong. Similarly here on TLT. Gap up rally. Closed above that big level at 150 now at the close. Next level 102.50. And this is big here for TLT. I think this is definitely a very strong move. We're obviously in overbought conditions here. Let's go ahead and look at that on the weekly chart. See if it gives us any additional information. So we're above the 55 EMA. Highly traded zone at 101.50. That'll be interesting if we can get above these previous dip lows. That would be quite bullish. Momentum very bullish. RSI almost overbought, but I do think this has a lot of room to run. Obviously, it has fallen quite a lot. We topped out up in the 170s. And we've fallen all the way down into the 80s. And you can see massive volume, massive buying. And I would expect this to continue higher. You can see that next highly traded zone as you zoom out up around the 120s. Moving over to the VIX, you can see we were watching this big pop. We got a sell-off, took out my trend line, back into the 1250 area, back below my 1275 level. So next support, 1177. I would expect it to continue to move lower. RSI and momentum both say it's going lower. So VIX selling off as equities go higher. Moving over to my accounts, I didn't do anything here with the IWM, still continuing to hold that position. Did rally a little bit, so you can see a slight loss on those calls. My break even on this position is up at 207, so I do have a couple of dollars of upside potential on these calls. And like I said in yesterday's video, I'll continue to roll these out on the weeklies if I have to, as I continue to get challenged on that max profit position. We're not quite there yet. And I do have a little bit of time on this position. My weeklies do open up tomorrow, so I do have the opportunity to roll out if I need to. So I'll take a look at those. And then looking at the Qs, you can see the dividend came out of the Qs here. So I do have these weird numbers on my puts and calls. But I still have my put. I continue to play those short-term puts, which continue to be profitable as markets go higher. And those have been keeping up with the move. So I had 90 cents on those puts, and then I made 84 cents on the move. So made basically all of the move. And then I sold the same put for tomorrow for 46 cents. I kind of tried to roll up here a little bit after hours. Couldn't quite get executed. Markets rallied super aggressively at the end of the session, just like I talked about. But still have my puts here. Still have quite a bit of room. My max profit on this position is up around 419. You can see almost $20 credit and a 398 call, and then 403 here for $16 credit. So that puts me up around 419 as well. So basically in that same range. And like I said, I can roll these up a little bit tomorrow for another weekly if I need to. We'll see what markets are doing. Like I said, we're seeing a melt up, They continue to make new high closes, so you have to trade that the best you can, but I do think there is still risk to the downside. And then looking at this put position on XLE, like I said, I sold the 85 puts for 27 cents credit, so looking to buy around 84.70 or so, which is that highly traded zone. It was down slightly on the day, so I took that opportunity. And you can see actually that we popped a little bit after hours, so we finished at 85.30, and then we popped up to around 85.40, so decently there. Looking to make 27 cents or $27 on that position. Otherwise, looking to get some shares and then start selling calls the same way that I have been here on these other positions. My price target is up around $87 on that stock. Moving over to my profit graph here for the Qs, just to give you a better perspective, you can see stock price right here, right around 411. I don't lose money even if we rally all the way up into the 430 area with those calls. I do have shares on and I do have shorter dated puts, so I have a lot of room to the upside before I start to lose money. Obviously, my profit at expiration does start to go down as markets rally, and I can mitigate that a little bit, rolling out each week until we eventually see some weakness, and then we close below the calls. But right now, everything looks bullish, and you have to trade it that way. And even if markets move lower, you can see I'm pretty well protected, well below the 400 mark on the shares, so in a good position, but slight bias to the downside just for that protection, still playing to the upside in the short term. Let me know down in the comments section what you think of the allocation to stocks. Does it actually predict weakness over the next decade? And does that matter if we see stocks going higher every single day? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.